Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Trade Talk and I am Hiral. Clearly, if you go to see in terms of markets, yesterday's session, it was a muted first half of the trading session, but clearly U-shaped recovery is what we've witnessed, and that's actually helped Nifty reclaim those 19,600 levels in trade. And this is ahead of the monetary policy that will be slated to be announced today at 10 a.m. Clearly, if you see markets have been facing a stiff resistance at its 21-day moving average, that's in terms of Nifty 50. However, it was interesting to see how the Nifty media as well as the metal stocks rallied in trade yesterday. If you see in terms of the options data as well, clearly you have the highest put OI, which is seen at 19,500 strike, followed by a 19,400 strike. Whereas on the call side, it's the highest at 19,800, which is then followed by a 19,700. Overall, the PCR has moved from 0.99 to a 1.18. If you see the futures OI build up, now what that is indicating is that fresh longs are being built now. Initially, we did see fresh shorts that were being built into the system, but now the tables have turned slightly. We've seen strong put writing additions at around 19,500 strike as we observed. And this is where the maximum open interest on the put side is placed as well. So from here on, what this means is that 19,500 is expected to act as a strong support level for Nifty 50 and as a deciding factor as well. Clearly, in terms of Bank Nifty as well, 45,000 is the crucial level that we have been eyeing. And it's going to be interesting to see how the rate sensitives also react in trade today, how Bank Nifty reacts in trade today on the back of the RBI monetary policy meet. So that's the overall market setup. But let's quickly move on to individual stock specific action in trade today. Firstly, you have a Zee Entertainment that is in focus on the back of earnings, plus the NCLT bit in terms of the hearing that is slated in today's session. Mika is joining by to give us more details in terms of what to make out of the earnings as well as the announcements that will be out in today's session. Mika, good morning. What do you have for us?
Good morning, Hiral. So yes, Zee Entertainment posted their earnings yesterday, and the numbers missed analyst estimates on all fronts by large margin this quarter. The company also reported a net loss of 53.42 crores versus a net profit of 106.6 crores a year ago. Revenues are up 7.6%, but EBITDA saw a 41% fall. The margins also saw a 656 basis point reduction to 8% from previously 13% from a year ago. The company's subscription revenue went up 18% year on year. This was driven by a pickup in subscription revenue post NTO 3.0 and Z5. The domestic revenue declined by 2 points. Domestic ad revenue declined by 2.6 year on year to 901.8 crores, registering the fourth consecutive quarter of decline in revenue, ad revenue. The company also released 32 shows and movies during the quarter. I have some brokerage comments. MK retains its buy rating with a revised target price of rupees 265. The brokerage has also revised its FY24-25 EBITDA estimates downwards by 14.7% and 3.3% respectively. This was done in order to factor in the company's Q1 performance and slower ad recovery. MK sees a significant downside from current levels if the merger does not fall through. Next, we have Dart Resource, which has maintained its buy rating with a revised target price of 320 rupees. It has reduced these FY24 and 25 EPS estimates by 5 and 11% respectively. The brokerage views this Sony Zee merger as the key trigger. Closure of the merger, coupled with improvising ad outlook, viewership share losses, peaking in its digital, which is offset by the higher loss in sports, are additional positives. And lastly, an update on the merger. Zee Entertainment and Culver Max Entertainment, which is more popularly known as Sony to us, announced their mergers in December 2021. And today, which is August 10, the National Company Law Tribunal will announce its verdict on the scheme of merger between the two companies.
Thanks, Mika, for getting us the details. In fact, Sony shares actually fell the most in the last 1 year, and this was mainly on the back of the warning over the smartphone demand that they've given as well. So it's going to be interesting to see what's the impact on the back of the NCLT hearing that comes in. But moving on, Mika, you have some other earnings for us as well. Which are the ones that you're tracking?
Yes. So first we have Tata Power. The company showed positive percentage growth across all fronts, while EBITDA and the margins beat analyst estimates. Revenue and net profit fell a little short. Net profit this quarter went up 29%, while EBITDA increased by 75%. Margins also saw a 774 basis point improvement. The company's current capacity, both domestically and internationally combined, stands at 14,294 megawatts, with the highest capacity in thermal, followed by solar and hydro. Renewable energy also accounted for 77% of the capacity additions made to the company in Q1. Next, we have FDC. Revenue went up 8.4%. EBITDA saw 56.4% increase, and net profit also rose 55%. Margins also saw a 698 basis point improvement. The company's board has also approved an acquisition of an additional 7% stake in its subsidiary FDC SA from its existing shareholders in order to settle their existing outstanding loan plus the interest. The board also approved a 155 crore buyback of up to 31 lakh equity shares to be sold at a fixed price of 500 rupees. Then we have BLS International. On a quarter-on-quarter basis, EBITDA and the margins went up, while revenue and net profit fell short this year. Revenue from the visa segment grew 25.9% year on year, while the digital services business expanded 140.5% year on year. The company also announced the IPO for its subsidiary BLS e-Services this quarter in order to raise funds to support growth strategies in the digital service area. Next, we have GMR Power. Revenue and EBITDA were up. Margins fell by 7 basis points, and the company recorded a net loss of 217.15 crores versus a net profit of 201.67 crores last year. 67.9% of the quarter revenue came from the energy segments, 11.1% from the high segments, and the remainder 21% came from the other segments that the company is involved in. The company has a 161 acres under discussion to sell to an agency of Tamil Nadu government, and the company's next phase of development is being planned for an additional 210 acres. Then we have Suntech Realty. Revenues are down 50.8% this quarter to 71 crores and missed Bloomberg estimates of 324 crores. However, the company's pre-sales grew by 16% year on year to 387 crores, and collections remain strong at 288 crores. The company had a net loss of 6.7 crores, which is compared to the net profit of 29.94 crores last year. And lastly, we have Force Motors. Revenues were up 53%. The EBITDA grew 3.03 times, and margins had a rise of 753 basis points. The company has also recorded a net profit of 69 crores, which is when compared to the net loss of 16.59 crores last year.
Right. Thanks, Mika, for getting us all the details. So these are interesting numbers that we need to watch out for. And the key will be to watch out for a Zee Entertainment and trade on the back of the hearing that is slated for today at the NCLT. So interesting moves that could be coming in there. And it's absolutely interesting to see how, the overall downside that we're seeing in terms of the Sony share prices as well. But moving on, a whole host of other chemical names and names like Schneider and Bata that have reported numbers as well. We have Varsha who's standing by to get us more details on how the results have been for these names and how the stocks could react. Varsha, good morning. What's in store?
Good morning. So we've got a bunch of companies who have posted earnings. So first we have PI Industries. Now there was good uptick in revenue while all the numbers did beat estimates. Now there was 33% growth in exports and driven by volume growth of 29% and 4% from price. Also, if you see, there was the EBITDA margin improved on account of favorable product mix and operating leverage. Now, if you see, there's this headwind going on in chemical industry on generic side, but PI operates in patented products and custom synthesis, wherein they work with the innovator companies to develop the product. So these headwinds as such doesn't affect them because the contracts are already fixed. The next company that we have is Abbott. Now the revenues were up 13.4%, while there was good uptick in EBITDA margins at 24% versus 20%, and net profit was up 41%, which beat estimates. The next company that we have is Likhita Infrastructure. Now the revenues were up 10%, while EBITDA was up 10.33%, and even the margins were at 23.2%. The next company that we have is V-Mart Retail. Now, if you see, the revenues were up 15%, but there was this growth in revenue, but there was pressure on margin. Also, company posted net loss this quarter. Also, there was decrease in average selling price. The next company that we have is Schneider Electric Infrastructure. If you see, the revenues were up 33%, while the EBITDA was up 71%, and there was net profit up 31% at rupees 34 crores. The next company that we have is IOL Chemicals and Pharmaceuticals. Now, if you see, the revenues were down 0.3%, but there was the net profit was up almost 32%. Now, decrease in material costs, which has helped this company to gain good EBITDA margins. Also, company is hopeful for increased presence in regulatory market, as the company has got CEP for paracetamol. The next company that we have is JB Chemicals and Pharmaceuticals. Again, the revenues were up 14.2%. The EBITDA margins were improved during the quarter on account of better business mix, then increased efficiencies in sourcing and higher volumes. Also, CDMO business continued its growth momentum, recording revenue of almost 119 crores. The last company that we have is Bata India. Revenues were up only 1.6% versus, if you see, the net profit, which was down 10%. Now, there was this discretionary spending front. Demand remains subdued in the footwear sector, but demand recovery and acceleration is expected during the festive seasons. Also, companies going into premium products, which will definitely help in future.
Thanks, Harsha, for getting us the details. It's a whole host of numbers that we will be tracking as well, and the reaction on these stocks that will be important. But moving on from reviews, you have one auto major that will be reporting numbers today, which is Hero Moto. It's going to be interesting to see how the stock reacts, because clearly there is some negative news that has been doing the rounds as well with regards to the tax probes that the company has been facing. That's some details that we will watch out for if the management gives out any clarity on that. But Vinay is standing by to give us more in terms of what's expected out of the earnings, because the two-wheeler space, again, will be in focus on the back of the festive season as well. Vinay, good morning. What do you have for us?
Good morning, Hiral. So, the net profit of the company is expected to rise 40% due to better pricing and improved product mix. Remember that this is not on the back of rising volumes, because if you see year on year, the volumes have fallen 3%. The slower demand for entry-level motorcycles in rural markets has been putting Hero MotoCorp's sales under pressure for some time now. But if you see at the margins, they will be coming at 13.2% according to the Bloomberg estimates, and that could be a 2 percentage point higher number than the number compared to the year ago period. So this margin expansion is coming on basically on the improvement in the product mix and the better pricing, and also the commodity prices have softened a little bit compared to the last year's period. So that is also contributing to the margin expansion. And if you see at the Hero MotoCorp's revenues, they are not rising very much because the volumes have not gone up. And since the volumes are not going up, they are making that up with the better pricing and better product mix. Management commentary will also be awaited regarding their collaboration with Harley Davidson and how they're going to ramp up that partnership after the recent launch of X440. So that is what is awaited from the company. Back to you.
Thank you, Vinay, for getting us the details. It's going to be interesting to see how the stock reports in terms of numbers. But moving on, a lot of other counters that are in focus on the back of news, the likes of an Angel One, Axis Bank, rate-sensitive sectors that will be in focus as well. My colleague Hemant will be joining us to get more details in terms of the stocks that are in focus. Hemant, good morning. What do you have for us in store from the secondary market?
Hi, good morning, Hiral. So a bunch of key developments across sectors. So starting off with Suzlon Energy, the board has approved, raising of funds via qualified institutional placement of equity shares, aggregating up to 1,500 crores, with an option to raise an additional 500 crores. The company reserves the option to retain the 500 crores in case of oversubscription, and the issue is authorized to open as of yesterday itself on August 9th. The company has set the floor price of the QIP at 18.44 rupees a piece, which is at a 5.7% discount to the stock's closing price as of yesterday, which was at 19.56 rupees on the BSE. As per reports, the debt repayment is primarily for the repayment of debt. So then we have Waaree Renewable Technologies, where the company has received a work order of turnkey project comprising engineering, procurement, and construction services. The project is to set up a rooftop solar project with a capacity of 287 kilowatt peak. Angel One again has made some interesting developments where the board has approved a scheme of arrangement to transfer business undertakings. The first business undertaking of Angel One will be transferred to Angel Securities, while the second business undertaking will be transferred to Angel Crest Limited. There's no consideration in the form of cash or equity share transfer for this lump sale. Then we have Bombay Dyeing, where the company has approved the delisting of its global depository receipt from the Luxembourg Stock Exchange. Axis Bank, again, the board has approved a proposal to infuse about 1,600 odd crores in Max Life through preferential allotment. Axis Bank's direct stake in the Max Life will increase to 16.2%, whereas the collective stake of Axis entities all put together with its subsidiaries will increase to about 19 odd percent. The transaction comprises of about 14.25 crore shares at around 113 point a piece. Then we have Titagarh Rail Systems, where the company, as per reports, has its subsidiary in Europe with Titagarh Firma, has been awarded a contract with Skoda Group for the production of 370 new railway coaches. The contract's total value is around 732 million euros. So those are some interesting developments, along with one last one with Reliance Capital, where the company has sold about 45.43% stake in Reliance Home Finance in the open market. This comprises of about 22 crore shares of Reliance Home Finance for a consideration of 54.47 odd crores. The shareholding of the company has now effectively reduced down to 2.47%. And Reliance Home Finance is no longer associate of the company. So those are all the updates on the back of key developments.
Thanks so much for getting us the details from the secondary market. A quick one in terms of the primary market update, wherein SEBI has revised the listing timelines, and you have an update on TVS supply chain as well. If you could just quickly take us through both these announcements.
Right. So I'll firstly take up the TVS Supply Chain Solutions announcement, where the company has raised about 396 crores from 18 anchor investors, and 2 crore equity shares were allotted at rupees 197 apiece. The key investors for this pre-IPO placement include Societe Generale, BNP Paribas, Franklin Templeton India, SBI India Life Insurance, Sundaram Mutual Fund, Tata Business Cycle, and the issue is expected to close on Monday. Then we also have SEBI, which has approved the proposal to halve the public issue listing time from 6 days to 3 days. This reduced timeline is voluntary for all public issues that are going to be listed from September 1 onwards. And it's mandatory for all the issues from December 1st onwards. This change in timeline will actually benefit stakeholders in numerous ways, according to SEBI's board. The issuers would receive their funds and allottees would be awarded their securities in a shorter period of time, so cash won't be locked as much for quite some time. Also, it would mean that subscribers who are not allotted their shares, again, would be returned their money back quickly. And this would also effectively kill the grey market and the efforts to artificially inflate the prices of these IPO listings. So those are a couple of key developments in the primary market.
Thanks so much for getting us the details. It's going to be interesting to see how the IPO market also reacts to it and what happens in terms of the prices that we see. So overall, a good day of trade that is expected, but clearly the rate sensitives will be in focus on the back of the monetary policy. We will have programming that will start soon on the same as well. 10 a.m. is when the announcements will be made. So please stay tuned to BQ Prime. Lots more lined up. Thank you for watching. And that's a wrap on Trade Talk and from my side.